I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market was narrowly mixed last week as investors took pause as background news did bring some concern. Monday, we saw the market open pretty sharply to the downside as the Saudi oil facilities were bombed. It was an amazing precision bombing, and it took somebody with some awfully good technology to make that happen. Oil spiked to the upside, and that intraday move was a record. And that had the markets worried, and the oil market going crazy, certainly some concern about much higher oil prices. Those did settle down later in the week as the Saudi oil facilities apparently are going to get back online quicker than people would think, and Saudi had plenty of oil to keep supplies coming anyway. So that made a difference. Though, if you watch our Future Speak show, which was on Wednesday, and also our special on Thursday on the energy market, you will see we talked about a premium, a risk premium coming back into the market. Tuesday, after we saw that stuff going on Monday with the oil, then we had some other news that shook the market up as the pre-market saw selling come in as the repo market, which almost nobody watches, went crazy. It has been stuck at around 2% for quite a while and really has been very docile since the financial crisis 11 years ago when that started. But overnight repo rates went to 10% as there was a liquidity squeeze. I'm going to talk more about that in a little bit, but the Fed acted to add liquidity and put more than $100 billion into the markets. And this was important going forward and for this FOMC meeting. The FOMC meeting did come. Markets were, overall not moving that big into the FOMC, and as expected, they cut by a quarter point. They almost had no choice with that repo market going nuts. But there were three dissenters in that, and Bullard was one of them. He wanted a half a point cut, and later said that he thinks manufacturing in this country is already in a recession. And later on, Rosengren came out and said, I don't want to cut rates anymore because we're in an asset bubble. And he's fearing that it will go up, the asset bubble will blow up much more. And then later, Clarita came out and said, well, the economy's in a good place. So that's just three voices of the 18, and they just don't seem to be able to all get on board in the same place. Basically confusion there, and mostly these are academics that are running our economy, probably a bigger influence our economy than the president, and it's a 6-6 situation if you ask me. I'm anti-Federal Reserve. You heard me say it many times before, and this is just a good example of their confusion. I want them out of the markets, and let's see what the free market does with these interest rates. Anyway, the market was going down after that FOMC news, and then the news conference came out, and it exploded to the upside because Powell said possible that they will need to resume organic growth of the balance sheet. That's more QE is what they are saying. And I'll talk a little bit more about that. It's very likely that they're going to have to. But a 30-point spurt late in the day on Wednesday, and that's why that happened. Then after that, the president came out and he said Jay Powell and his Fed Reserve fail again. He says They have no guts, no sense, no vision. That's what our president said about Jay Powell, who he appointed, basically regarding what the Fed's role is, which even I don't agree with. Well, the president is clueless also and doesn't have any idea what they should be doing. And he wants them, who he says he's a free market guy. Well, that is bull crap when you look at what he wants the Fed to be doing. So I'm in total disagreement with the Fed even existing, but at the same time, the president doesn't have any idea. Thursday, there was a rally going on, but then it reversed to the downside as now we're back in the discussion about the trade war. He said that, well, we could go to 50 or 100% tariffs with China if that's possible. Then on Friday he said, well, we're making a lot of progress in discussion. So that's really crazy. The market fell then from its highs and gave up most of those gains on Thursday. And Friday we have early gains because in the trade war, tariffs, they are going to be exempting plastic straws and dog leashes. So that's a good reason to get excited and to lift market up. But that's what's happening. And we saw the market get a little bit of a lift, but it's having a hard time holding. We're noticing that we are getting a firming, though, in the Russell again. There's this asset allocation going on, and that we think is likely to keep going for a little while yet. Let's get back to this discussion of the repo market for a moment. This was the first time in over 10 years that we saw like this, and it shows stress in the market. Now, granted, part of it is technical, is that this was the tax time in the middle of September, and that does cause some drain on the banks as the money goes out from the government, but it's really all about Treasury borrowing. There is big stress in the market because the Treasury has to borrow so much money. Here we are in September, and we're already over $1 trillion deficit. It is sickening that this government is just that's a huge part of this economy. There is that crowding out idea that the government has to borrow so much money that it crowds out the private sector. In this case, their borrowings are so high that they are essentially filling the dealers up with all of this paper that they end up having to buy, and that puts a squeeze and takes liquidity out of the market. So hence they come in and act and add liquidity into the repo market. And let me tell you something, the Republicans, they deserve this. They deserve the fact that they have there's no more fiscal conservatives out there. They deserve to lose everything, if you ask me, because they should have stepped up. They should get control of this government spending. They should make the government smaller. They should do everything that fiscal conservatives would promise to do and have promised to do, but they've lost it. I mean, they just fall over like a bunch of wusses backing the president, who would just spend money and cut interest rates to ridiculous levels and completely lose all real price discovery in the market, which we've done. So it is a sickening situation that the only conservatives that were really out there are just not allowing it. I'm a libertarian. I want free markets. I'm not a Republican, so don't put me in that category. I just want the markets to be able to function in an organic way, and we are so far from that, and it's getting worse. And this stress on the repo market is a good sign of the problems that are going forward. For the stock market, investors keep a bid under the market right now, and the focus is on liquidity and stimulus and value, as the market does manage to hold through all of this. And so we expect this rotation to continue for at least a short while. You'll see in the short-term view coming up at the end of the week that we think we're going to get a little bit more rally coming up here for the stock market soon. Then we think that the month of October has got more risk. We've been talking about that October into early November, that we're probably going to get a sizable downtick in the market, but we don't think that's the top yet that's formed. What will bring this break in October? Well, it's cyclical, it's historical, that's a tough month. But again, it's liquidity issues and the budget battle that we're in right now, and the Brexit situation and the trade war, and who knows what other surprises are likely to come. We're expecting a downtick, and we actually think it's viable in October. We're still looking for the bull market to continue into early 2020, but then we think 2020 is a down year, and maybe a big down year. I know it goes against history. Election years are normally up. In fact, since 1928, 80% of election years finished on the plus side, and that's the last 21 presidential election years. So me saying it's going to be a down year goes against history. But if the polls show that Warren or Sanders are in the lead, watch out. I actually think that the prospects of a socialist president and a Democratic government, well, before that actually happens, just the prospects of it, we will likely see a 20% decline in the market just on a whiff of that. And if that becomes true, you get Warren or Sanders as the president and the Democratic government, well, that'll probably be another 20 or 30% on the downside after that. So I think that the election year coming up is going to be one that beats the odds, and it will be a down year. The stock market, major indexes narrowly mixed. Here as I'm recording at midday, I'm noticing the market is taking a leg to the downside. So there must have been some news that came out that is moving the market down. Don't really know, but major indexes were narrowly mixed, and now they're all slightly down for the week at this point. 30-year bonds, they're up more than a point. The 10-year yield's down over 12 basis points. The 1 to 10 reinverts, that's 1 year to 10 year, and all of that part of the yield curve is inverted. The 2 to 10 year is positive by about 7 basis points. Gold market moves up by about $15. Silver also slight gains, but we're looking for silver to help the gold market pull back a little bit in here. Dollar gains about 0.75%, and the dollar moving up and the gold market moving up, again, is more of a safety bid relationship than it is where we expect the market to act long term. In fact, we think the dollar has got a ton of risk. Again, watch our Future Speak show on Wednesday. I've got more to say about that, because a lot of you that are free members or not members, you could sign up and actually watch the show in our preview week. That's a little announcement on that coming up. Oil, that just exploded to the upside, had 20% gains at one point overnight on that news of the bombing. It ends up around $4 or so, about 7% gains on the week. Follow me on Twitter at askSlim. If you're watching this on YouTube, please do give us a thumbs up if you like the show, and do become a YouTube subscriber. And I'll be right back, and I've got lots of stuff to show you. All right, this is where we look at the best and the worst stocks for the week. There's often things in here that are of a lot of value that are counter trends. We may be looking at stocks that had big gains, but they're shortable, or big declines are buyable. We look at cycle analysis, of course, and that is the rhythms of the market, or the heartbeat of the market. It's an observational way to look at the market, and we look at multiple time frames, which gives us a really good indication for market condition. We look for swing high, swing low, support, resistances, lots of things that are really important. And cycles are really the way to really get a good feel for the market. If you don't understand it, if it seems somewhat woo-woo to you, a little bit esoteric, well, go to our go to the navigation on the top of the askSlim site, and you'll see workshops. And when you look in there, you'll see the cycle analysis workshop. Click on that. There's a video there. There's a whole table of contents for the 20 video modules. That took me 2 years to write and over 6 months to produce. It's just an amazing, informative workshop, and I really encourage you to do it. In fact, since this is a preview week for us and we're running specials, if you're interested in taking that workshop, I'm going to reduce the price to our pre-launch price. Now, I don't even want to say it out loud. If you're interested in that, please write me, slim@askSlim.com, and then I'm going to bring you a link. I'll send you a link so that you could sign up for a really big discount to take that. So please do write me. Please do look at that, and this cycle workshop will just change the way you look at charts forever. All right, so we're going to jump into looking at some of these charts right now, and I'll explain cycle analysis to you as we look at this. So here is SunPower, gainer of about 15% on the week, just a nice looking chart. So what makes this a nice looking chart? Well, let's take a look here as we look at the important rhythms in here. So this blue arc down here, these are called cycle brackets. These are simply guides. They give us a sense for the rhythmic motion in the market. When a cycle closes well above where it began and doesn't even correct much, we call this a right-hand translation. In other words, this translated to the rally going all the way to the right side of this cycle right over here and left almost no time to correct. This is one of the most bullish cycle patterns you can ever see. What it says to you is that when there's a correction and then you break out above that high, you could move sharply to the upside, which you see we did in here. Now look at this cycle right over here. This buy zone was established by all of this, by this rally and this decline, and the distances between this low and this high. So what happened was that it came down into our buy zone and moving up again. This low to this high establishes a Fibonacci target zone, which is what we're looking for, getting above that level right over there and getting into that target zone right over there. We would expect that $17 is very achievable for this stock. It is a very bullish stock. Now, this gain was brought by the impetus was the big move up in oil, because as oil gets more expensive, of course, alternative energy is an area that people want to be invested in. But this business is growing, and it's growing for all of this group. First Solar up 5%. CSIQ Canadian is up about 5%. We love that pattern. We think it's a buy soon. But I'm going to show you one that I haven't shown you before, because we have added many stocks to our broad list, over 320 stocks that we follow. And here is Solar Edge. You can see this one looks almost exactly like we saw in SunPower. It is a beautiful looking stock that you can see in here, and it did the same thing. It gave you a nice cycle right in here that did not bottom really without any real size decline, and then nice decline right here right to this time frame, and then moving up again. See this? Excuse me. This is week one in the market right now. What does that mean? Well, week one of this advance, if you look at all these cycles, well, look at this big launch on week one. That lasted for another 2.5, 3 months on the upside. This one lasted for another month in a bearish cycle. And when you get a upside move like that and it's clear, well, this is going to last for a while. Solar Edge, a stock just added to our group. So this is number 2 of our best stocks for the week, and a stock and a group that we really love. Chipotle gets a rally. They've added a new steak dish, and to me, that's not a good reason to be going crazy in here and buying this stock. We think it's topped. You could see this inside down pattern right over there, and what that is that little harami right there, and then the big down week. It gets this gain, but you could see it gets into our fib extension that was a target area right up over there, and then gives you the sell signal. We think it's going to decline into November. That's in line with the rest of the market. That would be a buy area we're going to look for, and we're going to see it move again to the upside, we believe, into the early part of next year, which is what we think about the market, of course. The next one, this is really interesting because this is KLA-Tencor, CLEC. This stock moves up sharply. 6% on the upside. Maybe it's 5 now as it's pulling back. Now, full disclosure, I bought puts in this stock when it was up near the high today. And you would say, why would I do that? That is way counter to our style of analysis because we believe in momentum. We don't short stocks normally that are going up strongly. And you can see in here the beautiful cycle analysis as analysts upgrade the stock again. Well, they're upgrading it on this week. Where the heck were they down over here anyway? You could see the beautiful cycle rhythm right in here, the breakout above that resistance there and the explosion. But here's why I shorted it. Number one, it's getting late in this cycle. Number two, what we often do as the market moves up to highs is look for stocks that we consider to be overbought by a specific study, and that is the distance from the 34-week moving average or the 13-week moving average. Generally, when a cycle gets very far, when the price gets very far and late in a cycle, it trades back down to the 13, which in this case would be the 38%, that would be 22 points, or way down over here. Now, note this cycle. You see how far it got from the moving average there? And then right down to it. Whack. Well, that's kind of what we expect. So I took a shot. It's very thin. I bought only a few puts in there because you could not get very much. And it's starting to move down right now. I think the best case is the stock moves down to 145 with this somewhere in this 13-week moving average coming up. And still, that would be a 10-point decline, and I should get paid on the puts that I bought in there. So that is a look at KLA 10 Core. Analysts upgrade the stock. We think it's about to have a move to the downside. One more we're going to look at, another new entry to our universe in here, and that is Etsy, an online retailer. And you can see in here, wow, look at that 34-week moving average. Talk about cycles getting away from it and coming back down to it, and that being support, and then the breakdown under it. So what we have here is actually a head and shoulders that you see cycles create this, and if you take that cycle workshop, you'll understand that. And then it broke down. Now, when you get the breakdown, this negatively configured cycle right over there, then what you expect is when it gets into the resistance sell zones, it then reverses. So this stock, which now has bounced, we think has done about the best that it can, and we're going to be looking for it to move to the downside again. You get a good feel for the cycles in there when you look at that, and for the value of understanding cycle analysis, I go through all of that in the cycle analysis workshop. So please do at least go to that informational page on our site under the workshops and watch the little video in there and get a sense for what this is all about. I really encourage you so that you will send me an email for that special, very large discount link. That is the best of the week. And now I'm going to give you some stocks that, well, they didn't do so well. All right, this is where we're going to look at the worst stocks for the week, and we're going to start out by looking at Roku, another one that we have now added to our analytical list. You will note that there are some stocks that we now, when they were cheaper stocks or when they didn't have a lot of action or volume, they weren't that interesting to us. But then when we start to look at these and the patterns start to form and the volume starts to come in, then they become more interesting to us, and we then add them to our universe. We took a few stocks out that were gone and that got too cheap to really follow. And here is Roku. Look at the top in there and that major engulfing pattern right there. Well, what are the issues for Roku? Well, first of all, Facebook portal, Comcast, their new box they're coming out with. Netflix down 7% on the week. Following on the downside, we have been very bearish on Netflix, which has been correct. Roku loses to over 21% in here based on that, and this is a stock that's finished. So you could say, well, it's down a lot, I want to buy it. Well, that could work. It might be risky, though, as we think that when you look at this cycle pattern, so you see the rally, the sell-off, the rally, the sell-off, the rally, and the sell-off that's this early in the cycle. Well, that's why this points to the low way over here at the end of the year. If this gets a bounce, and it's likely to, it will be a short. A high probability that it will move to the downside, and we think Roku has this major top in place, that huge engulfing pattern. And if you're a holder of this stock, honestly, when you look at this pattern, you say, well, you just have to figure out what price you want to lighten up on your risk, if you ask me. The next stock we're going to look at is U.S. Steel. Now, this one comes down. This has our colored phasing in there. It helps understand the cycles a little bit better. Green being the positive or rising phase, yellow being neutral, and red being negative. And you can see when you get stocks that show you red, there are negatively configured patterns. All of these moving down right in here. This looks like it was trying to bottom in here, and they gave weak guidance. We wouldn't be surprised to see the stock try to bounce again, maybe hold in here at the 10.5 area, try to get back up to about 13.5, but we don't see it being able to do a whole lot more than that. U.S. Steel to us looks like a stock that's trying to bottom. We actually had given it credit for a bottom, but now it's coming down and testing that again, and that's not a horrible thing. We just don't think it's going to be able to do better than that range that we suggested in here for U.S. Steel. FedEx is the next one we're going to look at, FDX. Well, this stock had a sizable break. In fact, 12% down, 13% maybe down on the week right now. It's now entered this red zone right over here that looks to us like it's going to continue in here to the downside all the way through the end of November. That's how this sets up. This has minor cycles and dominant cycles. So this is your dominant cycle. You could see that right in here. And you could see the clarity of the minor halves in each of these. That's those dotted blue lines. Your minor half here, your rally, and the minor half already breaking down. That points to this red zone continuing way out to here, and that says FedEx tries to rally, forget about it. Earnings miss, guidance weak, analysts all downgrading the stock. Our projection 120 on the downside in this stock. We do not like it at all, and we think it says to us, short the stock if it tries to rally. Corning Glass, another really horrible stock, as this is a stock in the optical area, creating displays for mobile phones, and that's really their huge business. You got to wonder when you see this, and you see their sales forecast, which broke it. They really guided poorly. Analysts downgrading the stock. You got to wonder about Apple and the phone makers. When you see this, that's a bad sign if you ask me, and that says to me we're going to look for more to the downside in the stock, pointing towards year end that you see there. So Corning really looks like a horrible stock there. The last group I'm going to discuss was the retail group. It was quite weak this week. And we'll start out by looking at Gap stores. Now, Dillard's down 6%, Macy's down about 6%, so those stocks were really weak, and this whole group was pretty weak. But you can see in here what we're looking at. Gap stores down about 6%, A&F down 7%, Abercrombie, Urban Outfitter down about 7%. And we think these stocks in the teen outfitter area, the teen retail, are buyable. Now, they're really overall, you could see the downtrends in here, cycles going down, down, down. But the cycle bottoms in here, and then you get this rally. But it's only the third week off the bottom, and this entire group is like this. Now, granted, if you look at this cycle here and you look at this cycle here, they peaked in like the second, third week, so that could happen again. But generally, after you have several really big down cycles like this, the next one does better. So we're going to give this credit for hitting the sell zone up in here and getting a rally up here near 21 into sometime in maybe November or December, where we think the market's going to be doing better, and then probably still more trouble after that. So teen retail we think are better, and we think that they are buy highs for the next few weeks, at least in there. That's not a real strong reason to be investing in a group like that, but it is a reason to be looking at for traders or short-term swing traders that there is a potential for another move up in that category. So teen retailers looking better. The rest of the real retail group, we would say, not so much. All right, so that's the best and worst stocks for the week. And now we're going to get into our short-term view for the coming week. All right, this is preview week at askSlim. Well, you might wonder, what does that mean? Well, I talked a little bit about it. We get special for the workshop if you write me for that special coupon, special link, and you'll get that big discount. But what we really want to look at now is what's included in our preview and this amazing offer that we have. We have what's called our stock index report. That's essentially for a little bit longer term traders, and we have now come out with the stock index report daily snapshot, which is for short-term traders, for scalpers, for day traders, for people that trade things and hold them for just a day or a couple days. It's just an amazing thing that we have, and we are now offering it live. In other words, live streaming, which is just something that we thought was incredibly important to bring to you, so that people that were not using thinkorswim, which is our preferred broker, that they had other ways that they would be able to see this amazing product. And I'm bringing it to you live right now, so you'll be able to see what it is. And it's so amazing that you can see what happened today. The market just had a big break while I was recording, and it absolutely nailed it, as it has the last few days. And the importance is for you to know where supports and resistances are, what the relationship is between the different indexes, and for the purpose of pairs trade, and where the acceleration zones are. Now, that's nobody talks about it like we do. Where it's likely that if it gets into a zone, you could catch a monster trade. And that's what we want to do, is have bigger winners than losers. This is live right now, and I'm showing it to you live. And you can note the market had a big break. There must have been some news, and it happened while I was doing this show, so I don't know what it was. But look at the SPX. Now, we show you the cash indexes, but it's easy to convert to your futures. And look at this. It had this big break and hit this support area right over there. If it would have gotten into the yellow zone, it would have been a breakdown, and it would have been a acceleration zone, and it could have been a much bigger break. Note right over here the acceleration zone as it just blew through there and fell quick 25 points through there, and that is for the NASDAQ. And the same thing happened over here. It hit the exact numbers right over here on the lows through the acceleration zone, as that thing fell very sharply on the downside. Like I said, I don't know what the news is, but you could see as these numbers are just fantastic. I don't understand how anybody could trade these futures without having a good sense of the important levels for these indexes. And you can see what happened during the day, how key this is. While the S&Ps were falling right over here, and while the NASDAQ was falling, the Russell was rallying. So it gave you a great sense for which to be long and which to be short. This is just absolutely phenomenal when you look at that. That is the stock index report daily snapshot. It comes to you also with all of the numbers, the important numbers and analysis for you to see. This is the, like I said, the preview week, where preview means that you get to see it all. You get to see it all, well, at no cost. Just go to askSlim.com, go to sign, and right on the front page you'll see a free account, and sign up for the free account. You're going to get our daily snapshot for index traders, that live stream that you just saw. You'll be participating in what are some very unusual and interesting, fun things. Our level 3 and 4 members get to vote now every week on what their 3 favorite symbols are that they want to see analysis, and we're going to bring all of the 3 most heavily voted that you'll be able to see on our static charts. And our level 4 members get to request our charts, multiple time frame analysis, and they get the grids to put up on thinkorswim. So that's also included on static charts. You'll be able to see all of that analysis, and you'll be able to see our Slimulator. This is just incredible. It's an algorithmic analytical engine. It takes the 84 best traded symbols, stocks, ETFs, and futures, and gives you 3 different time frames of analysis that you'll be able to see: long-term, intermediate, short-term, plus our option bias indicator. It throws out the conditions for the market, and based on the next 3 to 6 weeks, what is the most likely directional bias that you should have, especially for option traders and option positions. It's amazing. Plus, we're going to add in Future Speak Show. You'll be able to see last week's, it's in there, and you'll be able to see analysis for 24 futures contracts, 6 segments of the market this coming Wednesday also. Just an amazing offer in there. All of that, well, for free. Just go to askSlim.com. If you're not a member, sign up to become a free member, and you'll get all of this for the next week, and you'll get a very, very good feel for a lot of what we do. So that's what my promotion is for today, and I think it's amazing because I'm not asking you to spend any money at all. I'm just asking you to go in and take a look and experience this, and I think you're going to see how good, how great all of our content is. When you sign up for level 2, you're going to get a lot of this, and you're going to get also our 400 video library in 8 categories for traders and investors. I'm sharing my 45 years of experience with you. So that is, I think, some great information. Please do become a free member if you are not right now, and take a look at this stuff. And then after you find out you love it, you'll sign up. And you can even write Matt at askSlim.com. And he'll give you a special for the first month or 3 months if you want to even do that. So just amazing stuff. I think that our team works incredibly hard. Matt, RV, Eric, Brian. We have our team that runs the website and the membership. So we have about 7 people plus our tech guy that's building this incredible stuff. And just wait till you see our new product that's coming out specifically for investors and long-term holders. Well, I'm going to keep it basically a secret, but it is the Slimulator Momentum Tracker that you'll be able to see on, well, almost every symbol. Just an amazing thing, and you will love that. And that's going to be part of our level 1 membership, which is a focus for a little longer term holders. So just wait for that. It's coming soon. We're just about to alpha test it right now, and you're going to just go crazy when you see that. So so much stuff. Please do become a member at askSlim and help us keep bringing all of this great stuff. All right, now we're finally going to get to it. You've been waiting for it. The short-term view for the coming week. We like to see how we did in all of our previous calls. I'll mention that as we get through each one. But we were not bad this week. We essentially missed some of the markets like oil, which moved up very sharply. We thought it would be a small down week, but that was anomalous, news based. And the rest of the markets acted pretty closely to what we expected. Stock market certainly did. So let's take a look in here as we look at each of these. We're going to start in light crude, and we're going to look again at daily charts for cycle analysis, because that's where our short-term analysis is. And you will see in here as we look at light crude. Now, the light crude market has this giant spike right up over here. Now, note the cycle rhythms. They're amazing. You can see the lows where they point right in here to the market. And then you get this kind of inverted head and shoulders look right over there. And this was a bullishly configured cycle. Now, momentum was turning positive right there before this news came out. That's really interesting. Momentum positive now, and there's that big spike that we saw in there on the upside, which is just amazing. It was way up here over $63 at one point, and now it's come down into the buy zone right over here. We expect this week to get some choppy action. We're going to think range bound. Here's the range we put in there. That's about just over 60. This is just about 57.5. And this is a buy zone. You get back down here into the high 50s. Well, that's 57.35 right over here. This is 58.5. So into that zone, then we think we're going to get another move to the upside. If we get some retaliation other than the sanctions, well, that's likely going to change, and we'll get some higher prices. But we now believe the risk premium is added into the light crude market. Do watch Future Speak, so you'll get more of that information. We'll think it'll try potentially 460. If not this week, well, it will be in the next couple of weeks right out over there. So in that zone, we think it is a buy zone. We're going to look for a little chop and then a move down and a very small weekend here in the range in light crude. Next thing we're going to look for is the gold market /GC. We thought last week that it would be a little bit of an upward chop, and you can see that that is what we've gotten in here. And we thought we would get a small up week, and that's basically what we have. Momentum in there is neutral, as you can see right in here, so we're not getting a lot of information there. What we think is we're going to be range bound also. The top of the range somewhere around 1530, the bottom about 1470. The silver cycles are a little bit different. You could see this right in here. This kind of calls for an early week decline in silver. So we think that you'll notice that it looks like it's trying to break out of this little pennant right in here. So we're going to call for a little bit of a dip, another rally in here, and a small week in the gold market. 1530, 1470 is the range that we're looking at for it to hang out in here, and then we're going to be a lot more bullish, a little bit more going forward, because we're going to be a lot bearish on the dollar going forward. And here is the dollar DXY. We said last week that we thought it would be a down week. Well, it's this choppy week that we're getting in here. Momentum's still up right there. It happens to be a very, very slight down week that we're seeing. Let's see, 1, 2, 3, 4, 5. Yeah, it's a slight down week, right? So we get pretty good credit for that. But look what we're projecting in here, that it's getting into a period where it will likely move to the downside. Well, while momentum is up, well, that's okay. It's not breaking down yet in the momentum category, but this cycle broke down. You see the diamond formation right in here? Well, that's what it's doing. And we think the diamond breaks to the downside and that you're going to get a move pretty good in here. We're going to look for it to fail and accelerate downward. And you could see the patterns in here that we're projecting. Down to this area over here, which we think is about 96.5, sometime in coming weeks, because the intermediate patterns are suggestive of that. So we're going to look for a downside break and a down week. Like we say, we still have upside momentum in here. It's looking like it wants to fail. It's not expanding, and it's pretty choppy. So we're going to look for the dollar to fail and then begin to accelerate on the downside. The bond market /ZB, you could see that right in here, that the bond market is in a flag. Now, when you look at the cycle rhythms that are in here, you could see that there's a big pattern way out over here, which is kind of rising, and then you have a corrective pattern going on, and the momentum turned negative right over here. So this is key. When you have negative momentum, when you have a flag, that means the probability of it coming down is higher than it going up. In other words, breaking on the downside versus the upside. And the projection oscillator on the bottom here is overbought. So my favorite analytical pair, and we have a video in there of about 400 or two of them on this, the combination of these 2 studies says to me the probability is high that this is going to resolve on the downside again. So we're looking for the bond market to maybe get a little bit more in here and then turn down and then come down to the support level. So we're going to call for it to get down to maybe 157 to 156 in here. This level right over here is near 156. This level right over here at this low is about 150, just above 157. So testing that low or breaking it and getting down to this lower support zone, and then having a little better time of it. But we'll look for this to be a down week, negative momentum, projection oscillator overbought, and please do watch that video or those videos and learn more about that. So as I said, the stock market, while I'm recording in here, took a downside leg. We were looking for the stock market to have a small week, but the risk being to the downside in this week, setting up what would be thought would be higher prices coming, and like I said in the end of the show, probably new highs in the early part of next year. There's actually a window of opportunity to take out these highs that we have right now coming up pretty soon, and I'm going to show you that in a moment. So let's take a look here at the S&P 500 in its present pattern and for the coming week. So we thought that the market would get down. It's come down into this minor support area. Now, right now, for those of you that are watching the short-term cycles, we're at 9 and 18 days. In other words, the minor cycles are around 9 days long, and the dominant cycle is about 18 days long. Right now, we are in the 8th day of 9. So we thought that this area would be coming down, and then after that moving up. So next week, maybe starting Monday, Tuesday, we have the potential of the market moving up to new highs. If it crosses this level right over here, which is this cycle low, and you'll notice that I have that in there as an alert set under that area of around, well, the low right over there was 29.57 or so. If it gets underneath that level, 29.57, it will change. It will become negative, and this will be pointing downward. Right now, I don't know what sold the market off earlier today, but this is coming down as it should. The bottom of this support zone right over here is about 29.77, about 13, 14 points down from where it is right now, and you could see momentum pointing on the upside. So outside of something crazy going on that I don't know what it is, this decline that we're in, or consolidation, should be minor, and it should then get one more move to the upside. We're going to call for kind of a little blip down and then a move up and an up week. Momentum still being strong. Note the opposite to what I just showed you in the bond market, that the momentum is up, the projection oscillator oversold. And when you get that, you get buys. You see right over there a buy, you see right over here a buy, and they went up and up. So that's where we're getting to right now. The probability is pretty good that whatever is causing this downside break will not get it down, breaking too far, and that next week will be an up week. So we're going to look for early dip, and then we have a good chance to equal or achieve this high at 30.28 before we get into a stair-step intermediate correction that's out over there. And this is that late September through beginning of November period that we think the market has got a lot of risk. Watch Market Week where we talk, Future Speak, where we show you the VIX. And we have this window of time, the September 23rd to 27th, where we expect a low in the VIX. In other words, this rally right over here into this week should get you a low in the VIX, and then VIX is set up to spike. So we're going to be looking for the stock market to have a kind of a dying gasp in this next week before setting up for what looks like an October corrective period coming up. That's what we've been aiming at, looking for, and that's still what all the analysis shows. I hope this was an amazing video for you. This show incredibly informative. Become an askSlim free member, get our free preview, take a look at that workshop page. and sign up for askSlim and help us support this big and growing team we have that keeps bringing you amazing products to you that is really just nothing but information. All of our analysis and an algorithmic engine that just is incredible that we had our tech guy build. And I hope you're enjoying it all. Send me comments, let me know. And I will see you next week. I want you to be so careful. It is so crazy out there. We're always wishing you great trading.
Well, I'm going to sit and I'm gonna do a step.